Constructing your life is about much more than just building a bank account. Each week, join real estate entrepreneur and mindset coach Austin Linney as he interviews guests who are constructing their dream lives and impacting the world around them on a daily basis. If you're an entrepreneur or wanting to start a business, or you just want to hear motivating stories of how others have overcome the odds, you are in the right place. And now for your host, Austin Linney.
Guys, welcome back to Construct Your Life. This is Austin Linney here. I have the honor of having Mr. Mike in the house. How are you doing, sir?
Excellent, Austin. Thank you for having me.
It's a pleasure having you in, sir. So this is great. We don't know too much about each other. That's kind of the joys of this. My audience is used to this. So what I like to do with my guests is kind of let you tell your story, and then we'll go from there.
Awesome. Okay. Well, I've been in the advertising marketing industry for many years, 30 years to be exact, and plus. And been in single family, always had rentals, always moving real estate around one way or another. And got into came in through the education seminars particularly through RE Mentor just a little over 3 years ago. And got involved with that wholeheartedly. It's been a great ride. I'm into general partner in over 850 doors right now. Mm-hmm. And I'm in a 426 unit property in Kansas City, Missouri, 88 units in Galveston, Texas, 60 units in College Station, Texas. We have 3 deals we're working on right now. So it's been a fun ride. I'm really enjoying it. Absolutely.
Well, is it a fun ride depending on what day they catch you on, or is it a fun ride overall from an investor's point of view? What got you interested in that type of investing away from your traditional job or career?
As I said, I've always been involved in real estate. I've always had single family rentals. I've done some flipping on it, and it's always been good. And it's an interesting story. I mean, just a kind of a quick side note. I remember when I've always been an entrepreneur. I started businesses, from 20 years old on up, and I've been in multiple different businesses and industries. But I remember renting my first office space, right? And this is going way back. And this guy that was the landlord, and who I went in and signed the lease with, and he just, of course, he was probably about 70 years old, and just wanted to tell me a story because he saw a young bright guy that was starting a business, right? And he said, he says, I've been an electrician my entire life. I've spent 45 years as an electrician. I showed up to work every single day, worked my tail to the bone. And after 45 years, I closed the business down and didn't sell it for anything, just shut it down. Said, but the real estate that I bought on the way made me wealthy beyond dreams. And that was his message to me, right? Basically saying, you can work your job, but real estate is where the real money's at, where you can really make that. And it's so true, because it's the same thing as now with me, is that I've been in multiple businesses. I've done well, had a good life. Everything has been great. But really, the real estate that I've purchased all along has been the game changer. And then getting involved with multifamily just got me so excited to feel like to even the opportunity to get into some of these large apartment buildings, which honestly I never really thought I could do. It just didn't seem obtainable.
What's interesting it's interesting when I started getting into real estate, I assumed that everybody had to be all in, and you had to like burn the boats and do all of that. But as I've gone down the rabbit hole and talked to many investors or people that have good W-2 jobs, what I'm trying to get across to them is you can build wealth on the side through real estate, picking up a duplex or even investing in large scale multifamily over the years. Like if let's say you take 15 or 20% of your income, right? And you're dumping that in investments. over time, the compound effect of that. And there's a good friend I have here in town, here in Austin, who his mom bought a single family house a year for 18 years. And then, they're all paid off. And it's like, I think that especially in the social media age that we're in, everybody feels like you have to do all these things. And real estate is a team sport, especially in the multifamily space. And you can operate in a space where you can still work your job. You can still be a family man, and you don't have to be a crazy person either.
So true. Yeah, absolutely. Yeah, no, it's that's that. And those aspects of the business are things that I just really love about it. Being in the advertising world, right? I mean, it's a good business. Obviously, it's been hard. It's been hit hard with just the change of the world, right? It's not the same kind of advertising anymore. But it's not really a team sport, right? So you don't, like, if you're, especially as an owner of a company, and you have a problem, it's not like you can call another advertising company and say, hey, what do you think of this problem, right? How do I fix it? But in the multifamily, especially in real estate, it's really easy. There's a lot of people out there that are really willing to help, want to help. They really enjoy talking about it. I mean, even just like this podcast, right? You're not going to find a podcast on advertising. But on real estate, everybody wants to listen to it and hear it and talk about it, right? Because it's fun, right? We really enjoy it. Yeah, so it's fun.
What advice would you give to anybody out there? A lot of my audiences are the younger getting into the business, on the stuff that you learned over the years as far as buying just single families and flipping and stuff?
You just get into what you can get into. So, no matter how much money you have, as little or as a lot, try to get into as much as you can get into. And if you need to start really small, you start really small, but it grows rapidly, much faster than you really think about it. I mean, much faster than what you predict usually. I just think of all the homes that I'd purchased. Of course, I live in California, and it's been quite a ride in California for my entire life. But you're figuring out that payment, and you're figuring out what you can rent it for, and it's just kind of seems to be just like barely. And how's this really going to work? But before you know it, the rents are going up, the loan payments going down, you refinance, and it becomes a much lower, payment, and you're cash flowing really well. And rinse and repeat. You just keep doing it over and over. It grows quickly.
There's a guy that was on Bigger Pockets recently. I remember watching him, Scott. I can't think of his last name, but he has this show, or he was one of the first guys I saw on TV that was renting like little rooms out to like create revenue. But what he said to me is, he said, it's amazing to me how hard the first to 5 were. And then he goes from 20 to 60 it was like water. And it took me 7 years to buy my first property. And then I bought 3 within 9 months. And I really think it is that initial fear, or that initial getting over the hump, that kind of gives you I can do this. And then you'd be surprised, right? I used to work private equity. You'd be surprised how much work is involved on $100,000 loan and a $10 million loan. It's pretty much the same thing. And I think when you can wrap your head around it, you crush your limiting beliefs, you crush your fears, you'd be surprised how quick you can move.
So well said, Austin. It's amazing. I mean, seriously, 4 years ago, I just couldn't even imagine buying into, 30 doors, 20 doors, right? And now getting in all these different properties. And what's funny is the 426 unit property in Kansas City was the easiest one to raise, to come up with the money. It was a $6 million raise, $25 million property. And it was the easiest one, because when you talk about those big numbers, everybody gets excited. Mm-hmm. Investors get excited. They want to be part of it. Other syndicators get excited. They want to, help out or be a part of it. Partners, people want to partner up. And you really get a really high caliber crowd, around you. I mean, as far as obviously the partners, that come into a property like that, but also the property managers and, everybody that's putting effort into it. It becomes it's a bigger deal, and you just get a lot of very good talent that comes in to help.
Well, I think people need to understand that you have to understand investors and people that are giving you money, whatever they are, they're you have to do a little digging in the psychology of humans, right? And that's what advertising is. And my question to you is, if you get to tell a guy, hey, you get to invest in this deal and you get to say you have 420 units, or you want to invest in this deal and you have 15 units, which one do you think they're more excited about when they're having a cocktail with their buddy? Right?
Absolutely.
And it's not even that they own all that. It's just that they get to tell. And so like, I think people need to understand there's not every, one of my good friends, one of my mentors says, not every dollar is created equal. Yeah.
Exactly.
So
that's right. Bragging rights.
Yeah. So talk us through what got you off the scene. Well, not got you off, but made you think about moving into the multifamily space.
I just kind of got into the training. I came through RE Mentor, right, out of Boston there with Dave Lindahl. And I came to one of their free seminars. And, I'm not usually one to kind of buy into those kind of things, right? I'm the guy in the back of the room with his arms crossed and saying, no way, nobody's going to sell me. But, and I was probably like that on the free seminar. But then they try to get you to come into another, like a 3-day boot camp. And then they have different courses that you can keep going to. And that's kind of what I did. And, at first, I'm just thinking, like, you're just listening to all this and you're just going, how are you going to buy a $5 million, $10 million, $25 million apartment building? How are you going to raise, $1 million, $3 million, $5 million? I mean, it just seems so impossible. But as you get the education, I mean, there's really no faking it in this business. You have to really know what you're doing, and you have to get educated one way or another. But as you do, it really starts, the light switch turns on, and you just really realize that this can happen. And this is not a luck thing. It's actually numbers. It can actually be calculated. And with the right guidance, you can actually do it. The big thing for me has been, of course, coming up with partners and team members that have just been, a significant help in my ride. Primarily, it's I've been helping in the money raising side of it, but through my training, I know all the aspects of it, and so I'm just real excited to be part of it.
And what was the first deal that you bought, the multifamily?
Well, the first deal, was a smaller building in Las Vegas that I bought on my own, but then got invited to come into a property in College Station, Texas, which from another team of syndicators, and was able to raise money for that. And so I was able to come in as a general partner and become part of that team. And I was very active and wanting to be involved. And obviously, because I had the training and the knowledge, I was able to really kind of, dive in and help them out. And then they ended up bringing me into another deal. And then I got into a deal and I brought them into my deal. And it's just kind of been evolving like that.
What gave you the confidence to pull the trigger on a deal like, let's say, in College Station, which I live in Texas, so I'm very familiar with it. I actually went to Blend myself, but what are you looking for? Anybody that's out there that's listening, that's looking to jump into a deal with somebody, and let's say that the syndicator or whoever has a deal, and what factors in the deal are you looking for that are a good indication? Obviously price and what you're paying for, but other factors that you're looking for in a deal to make sure that you feel comfortable about jumping in that deal with somebody.
Sure. Well, number one is cash flow. It doesn't always have to have a huge cash flow day one, but it has to be a property that can create a decent cash flow in a fairly short period of time, meaning like 6 months. And that's usually done through value add. It's done through finding properties that are like right now we're in contract on a property in Fort Worth, Texas, right? So it's a 60-unit townhome style type property in Fort Worth. 1984 build. Everything is original. All the cabinets and appliances and everything in it. But it's beautiful bones. It's like townhome style, right? They're just 2-story. Each unit's 2 stories. They don't have anybody living on top of each other. They have vaulted ceilings. They have washer and dryer hookups. They have a fireplace in each of the units. Half of them have garages that are attached to the units with a garage door opener, and they can actually go in their garage and there's an access door into their unit. So it really has the bones are there, right? And of course in Fort Worth, it's a main market. So you're going to pay a high price, and it's hard to get it to cash flow initially. But with that scenario, and then you have 2 other apartment buildings that are close by to it, that one's directly across the street, one's down the street, and they're a 60s build, but been completely renovated. So they're done really nice. So you can kind of see it's like the perfect storm, right? So you're taking the property that's really the newest in the neighborhood, but it's the least been updated or maintained. And now we have the ability to go in there, renovate the units, and raise the rents to the appropriate to the market value, and then turn that property, instead of being the kind of ugly duckling of the neighborhood, bring it up to be the jewel of the neighborhood. And that's really kind of the perfect scenario to come in and for syndication, because you can raise the money for all the CapEx and everything that's needed, and so you can just go in there and immediately get to work, and you create a business plan of how long it's going to take, 2 years, 3 years, 5 years, and then exit and find another one, do it all over again. So to answer your question, really it's about a property that has a good story, and that's key.
Yeah, and it's interesting because you could take the same things that you would look for in a single family house, meaning like, let's find the ugliest house in the nicest block, right? That's how I bought my first house that was already flipped. Yeah. And sure enough, property shot up 200% in 2 years. Like lucky / kind of knew what I was doing. But what I love about the multifamily space is with raising rents, and let's say in remodel or something of that age, the scalability of pushing like the profits and the actual value of a property. When you start talking about 10 units and up, 15 units and up, you really see some jumps in number. Because typically what people don't understand is that, yeah, on the surface, it seems scary, right? There's a lot of numbers involved, but it's a process, and all you have to do is work the process. And then, let's say that, your tenants stay for a year or two or whatever. It doesn't matter what happens in the economy. People need a place to rent. Like, so, and so that's why I think, multifamily is definitely the hot girl at the party right now, for sure. Everybody wants to talk about it, but the reason they want to talk about it is because over the long terms, it is such a stable asset that will get traded if the numbers make sense, right? It does. Like I talked to a guy the other day who was buying a deal in Phoenix, and I was like, dude, there's no way that's a deal. And he was like, it actually is, and there's still room in the deal. And so who am I to tell, so the rents dictate if it's a deal or not. And so you have to get to a place in this multifamily game, and you have to understand that maybe these are deals now, right? I don't have a crystal ball, but I think that we're seeing a society that, you're seeing more people that want to rent these days, or they're trading down, or vice versa. So the demand is there. And more importantly, I think in a city, because I was just in Dallas last week for business in Fort Worth, it just keeps going. Like my buddies were in from Kansas City. They're all from Kansas City. And we were talking business with an investor, and he's like, dude, does this town stop? And I'm like, no, it's just there's just cities everywhere. It just goes and goes and goes. Right. And so that's what you're looking for, that the draw, the commercial, the jobs and everything. And the numbers are very important, but also the longevity of a deal 5-10 years out is really what you're banking on. And like you said, that's why I love that you said that you have to sell the story of why it works. And I don't think enough people focus on the story, whether that be with yourself and who's on the team or the building itself. Correct?
Yes.
Yeah.
Absolutely correct.
Yeah. And so, for anybody that hasn't been in a deal or a multifamily and they're learning, like what part, so when you say general partner, what do you mean on that aspect? Are you bringing the money? Are you raising the money? Are you handling the remodel? Like what aspects of the deal are you handling?
Well, it's kind of different on every deal. the general partners are primarily the people that find the deal, fund the deal, raise the capital, and run the asset. So you're hiring a property manager that's doing all the management work, but somebody has to manage the manager. So we create a business plan at the beginning, which says, hey, we're going to buy it at this price. This is how much money we're going to need. We're going to raise this much money. And, the property's going to be worth, this when we're done. And it's a business plan. And so our goal with the property manager, they know clearly what that business plan is. And it's just keeping them accountable and making sure that it's all being done properly. And expenses are kept under control and so on. The thing about multifamily you'd mentioned, as earlier in reference to the difference in single family is the beauty about multifamily is that its value is based on its rents. Unlike a single family, its value is kind of only really worth, a home is only really worth what the same home in that neighborhood just sold for. They run the comps, and that's pretty much all it's worth. It's compared to what else is being sold in that neighborhood, but in similar size and style and and home. But in apartment buildings, it's not. You could have two apartment buildings two buildings that pretty much look exactly the same, and they can be on the same street. But if one is obtaining a much higher rent or NOI, net operating income, that property is worth more than the one down the street that's not.
Yeah. And somebody told me this earlier in my career, you have one renter out on a single family house, you're paying the whole mortgage. You have one renter out on an apartment complex, and you're probably still making your mortgage payment. And so that's the light bulb moment, right? To anybody in understanding that. I just did a Facebook Live with a developer friend of mine in Nashville, and he says he treats his development like he's the developer, but he treats it like a conductor. Like I've got my GC, I've got my property manager, I got my broker, and it's something that I think about too when I think about networking, like, right, who's on my team? Like who do I need? Not what can I do? Who do I need to get a job done? Right. And I think where people get it mistaken in the general partner or the syndication rule, it's like everybody kind of finds their lane. Like, meaning there might be a lawyer on the team, there might be a property manager guy there, and it seems like, yeah, the deal has changed, but it seems like you've kind of found your spot that works for you and your personality. And when you can be in that position, you shine and you're happy and everything, instead of doing things that you shouldn't be doing, which is you probably don't want to be turning the apartments from California. You probably don't want to be remodeling the apartments. You know what I'm saying?
Yeah. Well, that's exactly correct. Yeah, it's crucial to everybody find their own lane, and it makes that's another thing that I just love about this whole multifamily is that because it is a team sport, you can't take these properties down by yourself, right? You're just not going to do that, at least not on the larger properties. And so everybody knows that. So everybody's always looking for good partners to partner up with. And I recommend that for, beginners too, is to do that exact same thing. Find out what you're good at, offer that to other people, because there's a lot of people out there that don't have what you have. I don't care what it is, right? And you match up, and it makes the process so much more fun, like enjoyable, because you end up doing what you really like to do, and then you have other people on the team that really love to do what they love to do, right? So one of our team members, she's just a terrific underwriter. She loves those Excel spreadsheets.
Good for her.
I get emails at 3:00 in the morning, from her, and she just loves it, right? And she loves to talk about it, and she loves to explain it, and she loves to figure out problems with it and all that. And that's just awesome, right? That's not me. I mean, I know how to underwrite. I do work on Excel. I like Excel, but by no means do I like to be working on it at 3:00 in the morning, and doing that kind of thing. That's not me. So it's perfect because she loves to do that, and she's great at it. So, that's her lane, and it works really well.
Yeah. God bless her. Yeah, because it ain't.
Exactly.
It's not me either. And thank God for my business partner. Because he's like, I love tax code. I was like, yes, you're my guy. I was like, I'll never read it. Don't know it. Doesn't matter. What advice would you give out to any young investor out there that's looking to raise money? What are the aspects that you've seen after being in 800 plus units, that gets the job done? We talked about, like, if you have a bigger asset, it might be easier. But what are the things that you found over time?
It's about relationships, and you just start those relationships. You're not really, don't look at it as going out there asking for money. That doesn't work, right? You got to go out there and start talking about your business plan, your story, just like what you said, and the story, either the story on a property or the story of you, like what the kind of properties you're looking for in your business plan, and how you plan on, you talk about how good of an opportunity it is for investors to come in, and they gravitate. I mean, there's a lot of people out there that have a lot of money that they don't know really what to do with it right mm-hmm. there. I mean, I use an example, like I'm in Northern California, right? So I'm kind of close to Silicon Valley, and in my advertising business, I have a lot of high-tech clients, people that I would deal with. And, these on the engineer side, these engineers make a lot of money, right? They're paid really well, but they work like dogs. They're behind the computer, 10 hours a day, 15 hours, crazy amounts of time. And they're, doing code or what they do as engineers. And, but they don't even get out a whole lot. They don't have a lot of ways to really invest. I mean, they can buy, stocks online and, mm-hmm. do that kind of thing. But this is a fun kind of an investment for them, because it gives them a chance to actually buy real estate. It's a hard asset. It's something they could actually touch and feel. I mean, they can, any of our investors can go out to any one of our properties, and, we'll set up an appointment with them for the property manager to give them a tour, or they can just show up unannounced if they want, and just walk the property. And the property manager doesn't know whether they have, 50,000 invested in it or 2 million. They don't know. So they just treat them the same, and they get treated well as part owner of that apartment building. And it's just kind of fun, right? It's a fun thing to do, to walk around an apartment building and go, wow, I'm part owner of this. Mm-hmm. And it's obviously much more stable and turns very high returns.
Yeah, that you're 100% correct. I've got a guy here. His name is Christopher Nelson. He lives here in Austin. He comes from the tech world. And his actually whole deal is he likes to show tech guys how to invest in deals so they don't waste their money on stupid stuff. Like, he's like, because I've seen it my whole career. He does industrial, commercial, multifamily, stuff like that, ATM funds. And so it's very interesting. And I think when you can understand, and it took me a long time to understand this, there's a lot of people that have a lot of money that don't talk. There's a lot of savers out there, right? And they're looking for, because they don't know what to do. And so, what do they tell you in raising money? First, you educate, then you work on a relationship, and then you raise the money. Just because just because you're understanding, it doesn't mean the general public does. And I think that's the biggest issue in the real estate world is that all of us real estate people hang out with real estate people. So it feels like everybody knows the bigger pockets and they know rich dad, poor dad. But if you really look at it on scale, I would venture to guess that it's probably only really 20%. I mean, if I had to just throw a random number on it. And so if that's the case, well, then you need to be getting on podcasts. You need to be documenting your story. You need to be at meetups. You need to be educating yourself, and you never know. And one of the things one of my mentors says is the people that are closest to you probably won't be your investors. It's actually the people that you don't know that are your investors.
That's so true. It's funny. I mean, I have some friends that, do have some money, mostly the entrepreneur type, and, own their own businesses. And some of them have come in, but be honest with you, most of them, especially at first, they, it was no, they all come up with a reason why they didn't want to do it. And, of course, it's you can't push that, but they tend to gravitate back because,
yes,
as soon as you kind of put out that first offer, to them, and they do turn it down, I guarantee you the next time you talk to them, they go, hey, how's that property doing over there? And, able to report back that it's doing well, and the investors are doing well, and they tend to say, okay, well, let me know about the next one. We'll take a look at it. And so it can be a multi-step process to get them involved. And you never push. Matter of fact, if anything, it's the other way around. Mm-hmm. I mean, I tell people all the time, it's like, don't spend your last dime on this. This is not something you want to take money out of, your hard-earned savings account, that's your last nickel there to invest in property. This is more like money that you would come from, maybe stocks that you could sell stocks, or you could take money out of that, or, other savings, 401ks, things like that.
The only thing that you need to do in life is just go do you. And I promise you, if you keep doing results, people are going to find you, because them knowing you actually keeps them from investing in you. I mean, I know that sounds so counterintuitive, but they want to see it, right? Like, there's people, you'd be surprised how many people are paying attention, and you don't think they're paying attention because everybody's watching. I do want to ask one question before we get out of here, because I know this is a question that everybody asks. Do you have somebody within your group? I know each deal is different, and you're teaming up with different people. How are they finding these properties, and how are you sourcing this 800 plus units?
Well, finding the properties is, it's challenging in this time right now, because, cap rates are compressed, and, markets are tough. There's a lot of pent up money, even, coming out of this pandemic. There's kind of a lot of money has been sitting on the sidelines there, that people, because nobody really knew, 6-8 months ago, nobody really knew what was going to happen. Now they're starting to feel a little more comfortable, but it's about the broker relationships. It's about getting out there, and I talk to students all the time that are kind of have that same question, and they've made a lot of phone calls, they're talking to a lot of brokers, and they're doing all that. And I tell them, if you can get out to the location where you're looking, and fly out there, drive out there, spend a weekend, spend a few days, and book some appointments with some brokers, and go look at some properties. Try to do 1 or 2 a day if you can do that, and meet the broker at the property. Let them walk you through the property. You meet the property manager. It's a terrific educational experience, for one, if you haven't done that. And two, it's a game changer with the relationship with the broker, because the brokers, they're filtering calls all day from, people calling them all the time, and they're just people from all around the country that are calling on these different properties, right? But when you get to meet them in person, one-on-one, and you spend an hour with them at the property, you get through, the first, the hi, how are yous and everything. But, you get through that, and before you know it, you're talking about, the kids, and you're talking vacations, and you're talking about, it just gets off subject. And then you can ask the broker things like, how is this area? Where's the path of progress around here? Where's the growth going on around there? And you'd be surprised. They just open right up. Where they really wouldn't do that on the phone, because they have to be a little more guarded, right? They don't know who they're talking to. Yeah. But all of a sudden now you get a friend. And when you leave that property, and you just be honest with them, right? You just try, this property is probably not going to work, and this is the reason why, and this is what we're looking for. And you just be really transparent with the broker, just like you would with a friend. And you'd be surprised, but you part friends, but he goes back to that office, and you are in his brain, and he's trying, because he wants to make a deal, right? So he's thinking, who do I know that has a property that might sell that would fit, this person's, needs. Right. And they get, because half of their day is spent, taking phone calls in, but the other half of the day, which is the most important part, they're calling apartment owners, and they're trying to get, conversations going with them, and talking about, and some of these apartment owners they'll talk to for years. And, hey, when are you going to sell that property over there on 4th Street? Are you about ready yet? And that's how they get into the deal. That's how they get the off market deal. And then they just, the question is, who are they going to call first? And when they have that personal relationship with you like that, you tend to move way up on their list.
100%. I couldn't agree more. People want to do business with people that they like. And when you create that open relationship, and the first question isn't about the deal, and you're changing it up, or you meet them in person, right? Especially where we are today, they're probably just itching for an in-person meeting. But they're more adept. One of my buddies who's a marketer out of Sacramento, he says that you have to stay top of mind. Like you don't got to call them, but like there's a study out that he said that if like people don't see your logo or like don't see you post like every 2 weeks, at least like 13 days, I want to say, then they don't remember. And so it's like, yeah, like you might not be getting the engagement in the meetings or like your social media posts, but I promise you, like the consistency of that, the consistency of the podcast, the consistency of reaching out to people over time will compound to great results. But you have to have some sort of patience and understand that the daily habits, right? The daily habits is going to lead to a big thing. And I, you have to be, my favorite line, you have to be married to the process, divorced from the results, because the outcome is, it's binary. It doesn't matter really. If you go and you're a good person and you meet with them and all these things. And that's the stuff I think people lose sight of, that's another human over there. The owner is a human, the broker is a human. So treat them as such. And I promise you'll get great results.
That's right. Exactly.
Yeah, for sure. So if people want to follow your journey and they want to find out what you got going on, how would they do that?
So my website is growcaptoday.com, and the email is just mike@growcaptoday.com. And that's probably the best way to reach out to me. And we have an investor club that they can join on our website. They are interested in seeing our deals that come through. I'm always happy to jump on a call. I love talking about real estate. I love talking about multifamily, and I love helping other students. So, it's that gives me a lot of pleasure because, I started out with, the same way as most. And so it's fun to be able to help everybody else. And just seeing the excitement that's on everybody with this business as well, too. It's a lot of fun.
No, I can't thank you enough. Guys, if you like this episode, make sure you send it out to your friends, and we'll see you next time.
Thank you for listening to Construct Your Life with Austin Linney. If you enjoyed this episode, be sure to rate, review, subscribe, and pay it forward by sharing with a friend. Most importantly, take this opportunity to start constructing your life by taking immediate action on what you learned. For show notes, resources, and more information on one-on-one coaching with Austin, visit constructyourlifepodcast.com.